Is day trading profitable, specifically for retail traders? That is a very important question that you have to answer before you put your money on the line and actually risk your resources and your family resources. The answer to that is not simple. It depends on a few factors. Let's talk about what are these factors and how you overcome them so you can actually be a profitable trader just like a lot of other people worldwide, especially in India. Before I start, I want to bring up Mark Douglas. If you don't know Mark Douglas, you should go to our YouTube channel. Look, he's one of the best trading psychologists and trading coaches ever existed on this planet. He really breaks down things to you about yourself, that what's stopping you from being profitable is this and that. What he said is, no man ever reached to excellence in any one art or profession without having passed through the slow and painful process of study and preparation. Remember that. So if he heard about if your friends that he put in a trade and he turned his $800 into $2,000, and yeah, he probably did, but he's not doing that consistently. He did it one time and then he lost it again, and he lost more, and he lost even more, and sometimes, most of the times, he zeroed that account, especially options trader. If you know what I'm talking about, comment below and let me know if that was you. Look, I admit that was me. I zeroed my account so many times. I lost track. I lost count. So that was me in the beginning. So whatever painful process you're going through right now, it was me as well. Who can day trade the stock market? Thanks to the technology nowadays, pretty much everybody can trade the stock market. If you live in Africa or Asia, you can trade the stock market in New York, the New York Stock Exchange, using your cell phone. That was something that was never available just a few years ago. Most brokers had actual limitation on what countries to participate. Now it's open to everybody. You literally are not limited to the stock market in your country. So if you're from India or Asia or Africa, you're not limited to trade the commodities in your small stock market. You can go today. You can trade in England, you can trade in New York, you can trade wherever Chicago exchange, wherever you want. And it truly is a great time to be a trader, especially between the access to information, how fast it is, and the accessibility to the market. Anybody can trade the stock market, including yourself. And of course, myself, at some point, I never thought about it. But now I can pull my money out of it in a way that I can actually support my financial needs and my family using that particular certain trading strategies. Of course, you need a trading plan. If you don't have a trading plan, you can email us at daytradingfans@gmail.com and we'll give you that trading plan. We'll send you a PDF format of the trading plan for free. What is day trading? If you're new to day trading, you're probably confused. A lot of people, they refer to day trading as investment, and that is not the truth. Investment and day trading are completely different game. Investment, you're in it. You are a partner. You are with this company, ups or downs. You might put money today. Some people with the retirement accounts and stuff, they start working at 25 years old. They put money that they wouldn't touch for another 30, 40, 50 years before they see that money again with the interest. A day trader, you don't have this kind of money. You actually want to pull your money out of the market, not put more money into the market. So you just want that volatility. You want to benefit from the stock is selling at 10, it jumps to 11, bam, you get your $1 per share and you get out before it crashes again, and the cycle repeats. So day trading involves frequent buying and selling of securities throughout the trading day, you are between 9:30 if you're trading the New York Stock Exchange or the U.S. market, between 9:30 and 4 o'clock Eastern Standard Time. That's your trading day. You don't open before 9:30. You don't close after 4 p.m. And of course, day traders attempt to anticipate the next move, but as the name suggests, day trading is a short-term investment strategy, and the goal is to exit all trades by the end of the day. Contrast to this approach is the investment, like we said. When you buy and hold, I would say investors are a lot more successful than day traders. However, investors are not emotional in their buying and selling. Most investors don't even control their own account. They just put it into an index, and the index managers control that. Or they put it into a retirement account, and the insurance company or the investment company or the hedge fund invest it for them. So if the market goes down, the market goes up, they don't check it every day. They don't check it every hour. They don't check it every 2 minutes or 5 minutes like the day traders do. But day trading is exciting and lucrative. It's effectively, you can consider it gambling. Gambling was an edge. Gambling as a casino. Technical analysis, as Mark Douglas said, technical analysis gives you the ability to be the casino, not the gambler, which means it gives you an edge. If you understand how to analyze the price action, you are the casino. Yes, you're going to have ups, you're going to have downs, you're going to have wins, you're going to have losses. But at the end of the sample size, at the end of the month, at the end of the year, you will be up in your account. You will have a rising, let's just say, equity curve. But also, it takes a lot of people's money. It takes a lot of people's money because they get into it without the fundamentals. It's like a guy trying to do a surgery without going to medical school, or a mechanic trying to rebuild an engine without understanding how this engine works. There's an alphabet to the stock market. Starts with the candlestick. What is the candlestick? How you read the candlestick. Then after you understand the candlestick, you can move to the chart. What is the chart and how you understood the price action on the chart. Once you understand price action, you can move into indicators. Once you indicators like moving average, simple moving average, other different exponential moving average, all of these moving averages will help you become the casino in that game. After that, you can move into other things like fundamental analysis, like market, like news trading, like anticipation trading, like what Mark Douglas calls it, intuitive trading. There is so many different stages, but you have to start from block one. You cannot just jump into it and expect to be successful, just like anything else. Day trading involves buying and selling securities, like anything, like cryptocurrency, stocks, bonds, commodities, exchanges, exchange trading funds, which are ETFs, anything else, gold, silver, whatever you want to trade. Listen, I know people trade cars in a day, mostly, of course, with a wholesale dealership, wholesale dealer's license. But you can day trade anything in particular. Okay, day traders attempt to anticipate. You have to have some kind of conviction where the market is going. Just to let you know, the market overall over the last 100 years have a bullish trend. But in the intermediate or in the middle of these bullish trends, there is some downsides. So if your brain is fused to be a short, to short the stock market, or which means to sell, and that's how you make money. Because I was one of those. For some reason, I made all of my money from shorting in the beginning, and it became so infused into my brain. This is how I make money. But I'm trying to actually change that myself. So you have to have a conviction. You have to have a conviction of where the market is going to go. So, and of course, the chart and the technical analysis will actually give you a certain point of view of where the next move could be to risk. Unlike investment, this is very important. Unlike investment, you have to exit. This is a keyword. Exit all your trades by 4 p.m. by the market close. Now, if you're a cryptocurrency trader, that market is a lot longer for you. If you're futures contracts trader, that market is completely different, or currency trader. With profit or with loss. With profit or with loss. Holding no securities to avoid overnight risk. The biggest risk, I think, on Friday night. Between Friday night in New York Stock Exchange, between Friday night and Monday morning, usually have the biggest risk. Could go up, could go down in a very, because you never know what would happen those 2.5 days. So it's different from having 1 day of risk. Okay, so it's exciting, it's lucrative, but at the end of the day, it is gambling. You have to understand that. It's gambling with an edge. It's gambling like a casino, not the customer. It's you're gonna have wins, you're gonna have losses, but if you're a successful trader, you're gonna have more wins than losses, or at least the wins will be a lot bigger amount than the losses, because you're gonna be limiting your risk. As Marcus and Douglas said, technical analysis gives us the ability to be the casino. Very important. The second most important question is how to start day trading. Anybody at this time and age, anybody can start day trading. Here is why. The brokerage have commission-free online brokerage you can access from your cell phone, you can access from your computer, you can access from your tablet, you can access from your iPad. Whatever gadget you have, gives you more of a access to the market. I don't want to say direct access, because direct access involves like immediate execution of your trade order, versus access to the normal access like the retail trader do. That order goes through a third party. It goes through different steps before it gets filled for you. Even though it happens within seconds, it still goes through so many different systems. Versus somebody sitting on the stock exchange floor, he's got a direct access, which means it's from him, it's point to point from him straight to the mainframe of the stock exchange, and his order filled in like fractions of a second, was fractions of dollars difference. That's the difference. So commission free online gives day traders, the retail traders, much easier and cost effective method of accessing that market. Also, trading platforms or brokerage platforms like Interactive Broker, TradeStation allows you to execute trade quickly from home or from your car or from your work. You can be a full-time worker, and this is exactly what most people in day trading fans are. They are most time full-time employees, but they take day trades as a supplemental income to help them out. So let's look at the slide and see how you start day trader. Commission-free online brokerage gives you easy and cost-effective access to the market. Also, platforms like Interactive Broker, a beautiful, great, full of technical analysis and indicators platform that is available for people worldwide. We have people from India, we have people from China, we have traders from Korea, we have traders from Djibouti and Kenya trading on Interactive Brokers. So that is very, very good platform available to everybody. And the fees for a retail trader is unbelievable. It's like $5 to access this indicator or $2 to access that particular market. Unbelievable pricing, unbelievable execution. It's just beautiful all around, and the mobile version of it is great. This video is not sponsored by Interactive Broker. I'm just saying, it's one of the best trading platforms. I believe they all actually have trade station, or at least they give you access to trade station as well, and it allows you to access the trade quickly from pretty much any gadget you have. So once you have your account set up, once you start your trading, you have to identify the market. What market are you actually trading? And by what I'm saying is, what are you trading? Options market, or stocks, or crypto, or bonds, or what market are you trading? Also, what time frame? Let's say you're trading Tesla. You love Tesla. You have a Tesla in your driveway or garage, and you just love. A lot of people love Tesla for some reason. Are you trading the 5 minutes? Are you trading the daily? Are you trading the 15 minutes? Are you a day trader, or intraday trader, or momentum trader, or a swing trader? There's so many different markets. Every market is different. Every time frame has a different rules, because what happens is there are different group of people playing this particular time frame. So if somehow you're trading I'm not sure why, but let's just say you're trading the 1 minute or the 2 minute trade, 2 minute time frame, and it's not going your way, and you switch to 5 minutes, and 5 minutes is going against you, and you switch to the 15 minutes, and you keep adding to your losing trades, most likely you're gonna lose. You have to set your limits. You have to set your stop orders. You have to set your profit objectives on that particular time frame, and do not change it day in, day out, same time frame, so you can get that muscle and brain memory to do things almost automatically. Brokerage platforms now too allows you to automate your trades, of course using different order types like limit order, stop limit order, how much you want to buy and when to buy it, and how much you want to sell and when to sell. You can fully automate your trading before you even leave your house to your job, and do not touch it until you come back to the end of the day. Some of the trading platforms right now allows you to liquidate all your positions at 3:59 p.m. because doesn't matter if you win or lose, they understand you're a day trader, and you either want to lock your profits, or you're just going to want to cut your loss, and you do not want any overnight exposure, especially with futures traders. Futures, of course, the margin requirement for day trading futures is completely different from overnight trading. So future traders, almost all of them, they liquidate all their position automatically at 4 p.m. Now let's talk strategies. Day trading strategies. 6 in this particular session. We're going to talk about only 6. There's a lot more. You don't have to trade all of them. You just choose whichever one that fits you most and work on that one until you master it. But let's explain what's the difference. I can tell you there's a huge confusion about this different strategies, and a lot of people are just jumping between one to another without understanding the difference. We'll start with the first one. I was a fan of, a lot of day traders are fan of, and here's why. Fading, the day trader follows that contrarian mindset, which means you buy the asset that is being heavily sold. So as the let's do here on the board, as the stock is going down, as the stock is selling out like that, you buy. Sell out, you buy. A lot of people call it averaging down. Whatever you call it, that's how you accumulate. As long as you don't put all of your accounts on the first one right here, It works. It works, especially if you're committed to that particular stock or you're somehow familiar with that stock. So you have that contrarian mindset. You buy into asset that's being sold, and you sell into asset that's being completely gone, on a very wild rally. You as a trader, you use that strategy to predict that the herd mentality, the collective market mentality, pushes the prices too far in either direction. So it either goes so high up or goes so high down or so low down to a degree that somebody else, the value money, the hedge funds company, come back and say this particular stock is not worthy of being hammered to that level, and this is a good buying, point. And they jump in. Once they jump in, it changes the fundamentals of the stock, even though, changes the technical side of the stock, because a lot of people will go into argument about which one. Once it changes, everybody else was piling and will push that to a higher level. Second one will be a range trading. Range trading, the trader tries to identify assets that is commonly traded within a set price range. So let's just say the stock goes up, comes down, goes up, comes down, and becomes a resistance and support. So a range trader, so when somebody asks you what kind of trader are you, and you say I'm a range trader, that means you buy in between the support levels and the resistance levels. But you have to understand you have to be very familiar with that particular stock or commodity. So you buy near the low of the range, the support area, and you sell at the resistance area. Range trading requires precise timing, and executing orders in an inaccurate way may result in significant losses. Sudden news or events in the world might change that trend. That trend is not going to last forever. So at some point it's going to break out and it's going to shoot right up. And if you are selling here or you're shorting here and you have a short position and you think it's going to go back to the range and it keeps going against you, you're going for a wild ride. Here's one more thing I wanted to mention. There are such a thing as defending the price, especially in the commodities market. What does that mean to you? Let's just say a manufacturer that manufactures General Electric, for example, they need a lot of copper for their manufacture, or aluminum, whatever metals that they actually use. They will go to the market and they will buy and sell futures contract. As the futures contract continues to drop, they will accumulate their position. They will buy. As it goes down, buy, and they keep putting their position here, because what's going to happen is they want to defend the price once it shoots up. Why they don't want it to go over, like, let's say $100, for example. Because at this point, if copper goes over $100, it's going to be a losing business for them. So they want to crash it down. They want the price of the copper to go down, even though they have, like, let's say, 1 million futures contract that is making the money day after day as it goes up. Their manufacturing business is going to start losing money after $100. So as they accumulate in the way down, and then bam, they hammer that market at the resistance level. This way they book their profits from the contract, and in the same time they shock the market and force it down, and the cycle continues. They start buying again, it goes up, and they hammer it, and it goes down again, and it just continues to go. This is called defending the price, especially in the commodities market. Third one, which is, I think, everybody on YouTube, everybody on Facebook, everybody on Instagram talking about scalping and how it made them profitable. let's see what scalping is. Scalping is a faster version of range trading. Scalping uses technical analysis to buy and sell small price changes to an investment. So let's say the difference between the support and resistance in range trading is like $20. Scalping is using the smaller time frames, which is at least a 5-minute time frame. If you're a new trader, do not go into the 2-minute and 1 minute, because I guarantee you're gonna get hammered. You're gonna get chewed up by the losses. So let's just say the 5-minute trading, you go from, instead of that range of $20, you buy here and you do that risk reward ratio, and this way, let's say if you risk $1, you make $3. You don't wait for the whole $20, because the $20 might take longer, might take all day, might take 6 hours, might take 3 hours. Scalping is like you open your trade at 9:35 after the first bar is up, and 15 minutes later, after 3 bars up, you booking your profits. Or of course, if you could get stopped as well. So scalping is a lot faster than range trading. It is a form of range trading, but it's a lot faster, and you pretty much try to earn small profits from each tiny movement, and that's what scalpers are. They follow short-term price charts trying to find these trends. Momentum trading. Momentum trading is another strategy. The difference is momentum, the trend always changes, right? So if the stock loses money one day, it might keep losing money for a few more days until it bottoms out before other people. What happened is, let's just say the market is going fine. It's going fine, and let's say news came up of pharmaceutical company not being approved for the drugs. And what happened is, boom, day one it takes a hit. Now a lot of people, especially those who not have a very close access to the market, they come back in day two and they say, whoa, that went down, so they sell more. And now you got the scalpers and other people, other technical analysis people or technical traders, they continue to shoot it down. And what's going to happen is the market is going to start becoming very narrow as losses every day. Let's say these candles are daily. Every day is going to be a lot less, and then it's going to start going back up again. So momentum trading uses that momentum as a trigger. This is your trigger. So a technical analyst looks at that and say, wow, that is a trigger bar. Let's hit it. And they start, shorten it, selling it until it becomes a very narrow range. That's what it is. That's what a wide ranging versus narrow range bars. Narrow range bars indicate the momentum is dying, and there is a possible of reversal. Big range bar, which is this huge candlestick, are in fact a trigger. Could be a trigger, could be exhaustion, depends on where they are. If they're in the beginning like this, that's a trigger event that may result in multiple other bars in the same direction, doesn't matter if it's up or down. An exhaustion bar has already been after a long trend, and this is like the people just getting out of it. This is it, they're done with it. And then suddenly the momentum dies, and value traders usually buy here, but they sell the momentum. What else? News trading. I think news trading is pretty common nowadays, or a lot of people, without going into trading, without understanding technical analysis, they actually trade the news. They hear about Apple coming up with a new trade, with a new iPhone, and bam, they buy into it because they think this is it. It's gonna, as soon as it comes out in the market, the price is gonna go up. And that's why sometimes you see the market. Have you ever heard the saying that trade the rumors, sell the news, or buy the rumors, sell the news? So as Apple is about to come with an iPhone, the rumors push the stock market up. It pushes it so high, the news comes, right? And there's no more catalyst anymore. News here, and there's more catalyst. Two things could happen. It could be shoot right up for whatever reason, but a lot of other times it comes, once the news comes, people will start selling the news again, because the catalyst was this one right here, and it's already here, and there's no more catalyst coming. So a lot of people actually trade buy the rumors, sell the news. Number 6 is leverage. Leverage. What is leverage? For you as a retail trader, when you open your margin account with any retail trader, almost 90% of them will give you a 4-to-1 margin. For every dollar you have in cash, they will give you $4 to trade. If you have 10,000, they'll give you 40,000. If you have 25,000, which is a pattern day trader, will give you $100,000. Of course, if you have less than $25,000 in your margin account, you're only allowed to do 3 trades a week, 3-day trades a week, not swing trades. If you have more than $25,000, you can trade in and out every day. Now, some other brokerage, they will give you 8-to-1. Let's just say you put $125,000 into your account. They might raise your margin to 8-to-1 for that. For $125,000, they will give you roughly about $1 million to trade. Not a whole lot of them do it, but it happens. But under certain conditions of income and account. Now, professional traders, licensed traders, they leverage 100-to-1. For every dollar they put in as a risk asset or risk deposit into the brokerage account, they will trade $100. So at $10,000 in your account, which is a small amount in today's market, $10,000 will give you up to $1 million account. Of course, you have to show the brokerage firm that you're responsible, because what happens is if you put all $1 million into one trade and it moves one tick against you, one bar against you, 1% against you, that $10,000 is gone. And as soon as you hit $1,000, most trading firms, most proprietary trading firms will liquidate all your positions immediately without even calling you. Some of them, they try to call you. Most of them, they just liquidate it. It's an automatic. They don't even wait for a person to do it. As soon as you drop to $1,000, they will liquidate it. And it depends, of course, on your account. If you have a $5 million account, because you have $50,000, it could be $5,000, it could be $10,000. So whatever it is, it comes to a point where you have to show them they're responsible with the money to give you the 100-to-1. If you're not responsible, they will liquidate it. At some time, I used to have 300-to-1 leverage, because they don't change it. Let's say you put $10,000, you trade in a $1 million account, and you lose a couple of days, you lose until it gets to $2,000. That $2,000 deposit, they have not changed your $1 million buying power. So that $2,000, you still trading $1 million account. So you have, at this point, you have a leverage of 500-to-1 that day. Unbelievable. But of course, you have to be licensed. You have to have background check. You have to take the test. You have to pass the test. You have to be licensed and hired by a proprietary trading firm. So that's different from other trading. What is the advantage of day trading? The advantages of day trading. I love this one. Because for me, when I started day trading, at some point I was applying for a job. And then during that interview, that particular job required an actual let's just say a psychological test to see where your head is or where your mindset is. And at some point, and that particular interviewer asked me, and that was years and years ago, asked me, what do you invest in? And I said, I don't invest. I pay my bills first. I pay my mortgage. I pay my car payment. I pay my debt because I don't understand investment, and I don't want to risk my money. And he was baffled. He looked at me like I was an alien from Mars, because he could not believe a guy coming to apply for this particular job saying he does not invest or he does not have anything to do with the stock market. So as I left, of course, I didn't get the job, as you can imagine. As I left, I wondered why he gave me that crazy look. So I started looking into it, and that was the beginning of me going into trading. One of the first things I actually Googled at that day that I came out of his office, what is day trading? What's the advantage of day trading? And this is what I got: advantages of day trading. Quick profit. Day trading gives you the ability to book money on daily basis. No question asked. You will make money on daily basis as long as you know how to predetermine your risk and how to take your stops, and you don't have any other conflicting psychological problems that interferes with trading. For example, I think the book Trading for a Living states that almost all losers in trading business are the people who are very successful in life. Lawyers, doctors, accountants, teachers, whoever these are, they are very bad at trading. Why? Because a lawyer knows how to form the environment to give him what he wants. He does not have to abide by other people. He can manipulate his environment to give him what he wants. In trading, unless you are a hedge fund company and you can literally trade millions of shares at one bar at one moment and create that immediate momentum in the stock, you have to abide. You have to stick with other traders. You depend on the dynamic traders to move that market for you. So when you buy something, understand that you have not moved that stock. Somebody else will move it for you, and that's how you profit from it. So it will give you quick profits if you know how to play the game. Number two, you work for yourself. Oh my God. It is true, but I can tell you it is the one single reason a lot of people struggle with day trading, especially myself. When I started day trading, I was looking for replacement of my income. And let's just say I make $10,000, for example, from my job, for example. I wanted to make $10,000 on continuous basis every single month. Not just that, I broke it down. I said, okay, that means I need to make $400 a day. I need to pull $400 a day from the market every day. That did two things for me. Number one, created psychological pressure that I have to make that money. So when I have a losing day, I'm losing my mind because I'm not just lost my $400 profit, I actually lost another $400 of risk. So that put me 2 days behind. That created that psychological pressure. Now, the good thing that comes out of it, let's just say you put your profit as $400 a day. That is a good starting point, because now you're not really expecting the stock to go to the moon. I love Elon Musk when he says it's gonna go to the moon. So once you hit your $400, you get it. You book your profit, you get out, you go on with your day. So it creates a good expectation. It creates a more of a realistic expectation from the stock market. Number three, no overnight risk. no overnight risk. Retail traders turn day trades into swing trades almost every single day, and this is a big mistake. If you identify yourself as a day trader, you need to close out that trade, doesn't matter with win or loss that day. If you identify yourself as swing trader, that is fine, that is completely fine, but be honest with yourself and do not turn a day trade into a swing trade. Get into the trade as a swing trade. Set your loss as a daily trade, not intraday trade, or a swing trade, not intraday trade. This way your stop is going to be bigger, you're not going to get chewed up, and you're not going to move your stop up, you're not going to move down. All of this will go away once you put in your mind that you are going into a swing trade, not a daily trade or not intraday trade. Number 4 is, it's not boring. Trading is exciting. I've been doing it for so many years and I'm so passionate about it today, as passionate as I used to be when I started. It makes you wake up every morning. Unlike any other job with a fixed income, fixed income makes you go to work like bored. Today is like yesterday. There is nothing new. Day trading makes you wake up in the morning and understand that there's something new happening. There's something coming up that has not happened before. There is a potential to make money, just like any other side hustle. I love it. I love the feeling. It just makes me feel alive, and I'm sure it does makes you feel alive as well. Nowadays it has easy access. Let's be honest. If you're trying to apply for a job, you have to go through a whole lot of process. You have to go to interview. You have to work for a full month, not get paid. Sometimes even more. Sometimes you have to go to like internship for 6 months before you see any money coming from that job. Day trading could profit from day one. Matter of fact, most people got into day trading. The way they stayed with it is as soon as they got in, they took a trade and it shot up and they made money. And it becomes, if you made it as easy as it can be, and you ask yourself, why haven't I learned that earlier? But soon enough, of course, you understand this is not as simple as just buying and holding. There's a lot more involved. But what I'm saying is you can make money day one, and there's no other job on this planet gives you money from day one. We cannot talk about advantages of day trading without discussing the disadvantages of day trading. What are the disadvantages of day trading? Number 1, in the beginning, there's a high probability of losses. You're going to lose more than you're going to win. And you're going to have to overcome that somehow. Either you trade a paper account, a simulator account, or you have enough money to continue to redeposit in your brokerage account, and some people do, because it's different game trading a paper account from a live account. Because a lot of people, they are very successful at the simulator, and they go to live account and brings that psychological pressure that they cannot deal with. They realize they have a whole lot of other problems that they have to deal with. So there's many ways you can overcome that, but at the end of the day, there's a high probability of losses, especially in the beginning. Now, after that, you're going to be a lot better, you're a lot more successful, and it's going to be a lot easier for you. Fees and taxes. Well, day traders, unlike professional trader, a professional trader that works for a proprietary company, at the end of the year is going to get something called K1 schedule, which is nothing but a partnership. It just says that you made that $100,000 from this broker, from this account, from this particular firm. It doesn't say anything else. It's not considered an investment. For the retail trader, however, it's an investment. So taxes comes up based on how long you held that. And day traders have the highest tax brackets, more than the long-term investment. Long-term investment is a lot less taxes. So you're gonna pay for those winning trades. You're gonna pay taxes. some of the losing trades, you're gonna have something called a wash sale tax condition, which means some of it will not count toward your losses, unfortunately. I'm not an accountant. You can ask your accountant about that, but this is a disadvantage of day trading if you're a retail trader. It doesn't stop you from doing it, because I can tell you right now, I'd rather make $1 million and pay $400,000 in taxes than make $100,000 and pay 10%, because that 10% is going to be 10,000. So at the end of the day, I'll be going home with $600,000, not $90,000. So I don't mind the taxes, because I get paid at the end of the day anyway. The third one, high stress. I have worked with very successful people, very happy people. Once they go into day trading, they stress out because they never experienced the losses that could come in. A lot of people, let's just say they start realizing about their own greed, their own fears from day trading. Day trading is nothing but you and the screen in front of you, and it's going to show you exactly who you are. If you stop for a few days and think about what you did last week, let's say every weekend, Saturday and Sunday, you look at your trades. You're supposed to log your trades. You log your trades. You put it on the checklist and the trading plan, and you come on the weekend and you review those trades to see what you did wrong. It's gonna stare you in your face. It's gonna tell you you were so greedy. You thought it was gonna make so much money until it flipped against you, and you still didn't sell, and now you end up with losses. That piece of paper is gonna show you who you really are. So it is high stress for some people. Number 4, time consuming and challenging. Time consuming because if you really are intraday trader and you are all day thing, so you don't have any other day job, and you sit on the front of the computer waiting for a trigger bar to happen, it will be time consuming. At some point, I used to sit on that computer at 9 o'clock in the morning and do not get off that computer until 4 p.m. unless for break or coffee or bathroom break or something like that. So it is time consuming unless you automate it using limit orders, liquidation orders, stop orders, things like that. And of course, it requires money. Day trading requires money. Don't let anybody else fool you and tell you otherwise. This is a business. This is a game that you go into the market with some money and you say, let me see how much money I can make with the money I have. Other jobs require your time. Other jobs require time and skill. But this particular profession requires money to make money. Of course, skills as well, but you have to have money on the line to make money. It's not your time on the line, it's your money. So it requires deep pockets. Why day trading is not for everyone? Good question. Why day trading is not for everyone on this planet? Just like anything else, right? A guy sells sandwiches. He buys something for cheap and sells it for more money. A car dealer, he buys a car for less money and sells it for more money. A drug dealer buys his drugs for less money and sell it for a lot more money. So stocks are the same thing. You buy the stock for less money, you sell it for more money. Why is not for everyone? Why some people cannot deal with it? That's because the overwhelming majority of day traders lose money in the beginning. You go into it, you don't know what you're doing, you start making money, you commit more money into it, you lose it, you zero your account a few times, and you get out, and you never come back to it. You'll realize it's not for you, and you come. I know almost half of my friends did the same exact thing. They get in, they get out. Matter of fact, I think Mark Douglas in one of his shows, in one of his lectures, he says as he started working for one of the trading firms, The manager of the trading firm came to them day one, and he started his brief to them with those words. He said, commodities trader lose all their money within 6 months, and they are considered terminal traders, or terminal, like a terminal illness. And your job, he's telling them, your job is to make them comfortable until they expire and you move on to the next one. So yes, it does. A lot of people lose money in that. If you want to get rich quick, unfortunately, in this day and age where everybody has a camera and everybody is trading, and you got 18 years old coming on Instagram saying, promising to make you rich quick with whatever scamming method they pull money out of you, if you are chasing get rich quick, it is not going to happen for you. This requires charting and technical analysis, and technical trading requires effort, requires knowledge, requires skills, mental skills that you have to develop. I have seen a young kid on an ad in I think Facebook or something like that, and what he says is, I promise you, you will never lose money again. I promise you. You know that under FINRA and the SEC in New York Stock Exchange, even investor advisor have been working for 40 years in the business, is not allowed to promise a person that he's not going to lose money, because that is misleading. You got nowadays you got 18 years old, 17 years old, 16 years old kids saying that I promise you, you're not going to lose money, and they go there with pretty much no repercussion. An investor advisor says something like that, you can sue him and get your money back. You can take him to court. You can even put him in jail sometimes, but because it's a criminal act. But you got those guys, they pay a couple of dollars, they put an ad on Facebook or Instagram, and they pull your money out of you with false promises. Other people, like there's a guy that says he shows a very, very limited lifestyle. He goes, yeah, because I donate all of my money. I put all my money to charity. But somehow he's claiming he's trading $5 million account. So I'm not sure if he's got $5 million or he's donating all of this money. Other people, there's so much misleading information out there. Try not to fall for it. Try to be smart about it. Take an advisor from TikTok. Oh my God. Nowadays, we move from YouTube generation to Facebook generation to Instagram generation. Now we're TikTok generation. People putting investment advisor on TikTok. People taking their investment advisor. They taking their news. They taking whatever media and information they consume is coming from TikTok. And this is, I cannot tell you how misleading it is, but it is misleading, and be careful with that. So if you're the kind of guy that either not willing to commit the time to learn the trading skills, mental skills that is required for trading, I would say it's not for you. But if you are willing to put the time to risk certain amount of money, either to buy a simulator account or to put some small account and practice on it until you get it right, oh my God, I promise you, it will be the best thing ever done in your life. 5 years from today's date, you will be thankful to yourself now for actually starting this, because the potential is just unlimited. The only limit to making yourself rich in this business is you and you alone, and what other problems you might have inside you that prevents you from doing that. What does it take to be a day trader? Great question. In this slide, we discuss on only 6 points. Sometimes it takes a lot more than that, but we're going to focus on 6 points. Of course, you have to have a brokerage platform. Let's say you subscribe into Interactive Broker. You get all the technical analysis from technical tools, indicators from Interactive Broker. It's going to help you out. It's going to really help you out. Matter of fact, not just help you, it's a requirement. You cannot trade without having a platform, without having a direct an access to the market, which is a platform, and some tools to analyze what's happening in the market, like technical analysis indicators, whatever these are, or even price action if you're a price action guy. But you need that chart. Number two is capital. You need a capital. Doesn't matter where it's coming from. Is it coming from your proprietary trader? If you're good, yes, it's coming from there. If it's coming from you, it's coming from you. If it's leverage that you're using, that's fine. If it's margin account they're using, that's fine. But it requires capital, because you go to the market and you say, how much money I can make with this much money. I'm trading my money for time. This is different from the job where I'm trading my time for money. You actually putting money on the line to say I'm buying time, or I'm saving my time. I'm making money using money, so I don't have to waste my time. So it requires a capital. Number three, skills and knowledge. Knowledge first. You have to develop the knowledge. You have to join our day trading fans, or day trading club. It's called day trading fans, and learn from other traders for free. Or watch those educational videos about how to deconstruct a chart, how to understand the candlesticks, how to understand the patterns, how to understand the price movement, how to understand the indicators and what's telling you. And once you get that knowledge, start practicing. Start practicing with using hotkeys, with buying and selling, with simulator account, with a paper account, with a live account, whatever it is, you need to practice. Just like anything else. Let's say if you're a soccer player, right? He knows he has to kick the ball. He has to understand that he has to kick the ball toward the goal. That's knowledge. Then he has to practice kicking that ball over and over and over and over again until he develops the muscle memory and the brain cell memory to do it and do it right every single time. Number three, market news and research. If you need to be focused on, in the beginning, I highly recommend that you focus on one and one only stock. Here's why. You need to be more familiar with that stock. Let's say Tesla is trading completely different than Apple. Apple is a lot more liquid, very small spread, does not move as much, and the trends are a lot more reliable. Versus Tesla is a lot more volatile. The spread is huge, and for no reason it trades like a penny stock. It goes up $100 in one day and comes down $100 the other day for no particular reason, no news whatsoever. So you have to understand which stock and what is that stock is doing. So if you're, let's say you're Apple stock trader, stick with that so you develop that intimacy with it. Let me give you an example or a logic. If you are a dancer and you go to a club and you dance with somebody, let's say you have a dance partner, and you go to the club and dance with your dance partner, that is going to be you're going to be very in harmony with that. Your dance partner you're going to expect or anticipate the movement of your dance partner before he or she even do it. It's going to be very, harmonious relationship. Versus, let's say your dance partner goes to the bathroom and now you have to dance with somebody else, another lady on the dance floor. It's going to be chaos. It's going to be chaotic movement because you don't know how she moves, you don't know how she starts, you don't know how she finishes, you don't know how she turns around. It's just like pretty much controlled chaos. That's what we say. It's a completely different relationship. So when you are intimate with that stock and you trade that stock on a daily basis, you become intimate, you understand it, you anticipate the movement, you know the limits of it, you know the averages or the ranges of it as well. Number 5, patience and plenty of time. I made that mistake when I started. I wanted to replace my salary, so I was not patient, and I used to take huge trades. Like I used to put all of my money into options trades. Let's say let's just say I had my losses go up to over $100,000, 6 digits in one trade in less than a few minutes. And I would sit there and pray it goes back in my favor. And if it doesn't go back in my favor, I'm like, at some point I think I cried in front of the computer, because it took almost, you could say, a house, the price of a house in the US, in a few minutes. I think that was a Tesla stock actually. So what I'm saying is, you have to have patience. You have to only risk 1% of your account, 2% of your account. This way, if you are wrong, you still have 100 other times or 50 other times to make that money back. But if you put all your money in one trade and it's double or nothing or all or none, 90% of the time you're going to end up with none. Guarantee. You have to, because what happens is you go into mental freeze and you would not be able to do what's next, versus if you only have 1% on the line, it's just going to be irrelevant to you. So you're going to execute your trade in a perfect way. The right mindset. I had the wrong mindset when I started. I admit that. What fixed me up is Mark Douglas. I can tell you that. And I have paid a lot of money to a lot of people. All of them was nothing but crazy talk. I paid $6,500 for a guy who's supposedly teaching me how to trade a 2-minute stock, 2-minute time frame, and it was a complete. I don't want to be nice, but it was completely useless information. He couldn't even make money from it. He would just look at the chart that happened yesterday or an hour ago, and he said, "You buy here and you sell here. Do you see how it works?" But when he goes live, he wouldn't show what he was doing, because most of the times he was losing, or maybe it's a simulator account. So you need to have the right mindset. You need to understand your stop losses. You need to have a trading plan. Trading plan have five sections. Remember that. Trigger, entry, target profit, trigger, entry, risk, parameters, target profits, and of course a review after that. So you need to have that trading plan. If you don't have a trading plan, let us know. Visit our website at www.daytradingfans.com or email us at daytradingfans@gmail.com, and we'll send you a PDF format of our trading plans for free. It's got 12 different strategies you can apply to your trading. You see which one you like, and of course you stick with that one. Is day trading profitable? This is a question of this particular video, right? Is day trading profitable? Day trading is profitable, but not easy. Day trading is simple, but not easy. Profitable, but not easy. Not easy. Day traders, they end up successful and make a lot of money. They are exception rather than the norm, because just like any other thing in life, it has 90% failure rate. Soccer has 99% people make it from soccer, or at least profit from playing soccer. Tennis, whatever it is, dancing. Everybody goes into anything. Any profession in this world have 90% failure rate, and trading is no different. So it's an exception. Learn as much as you can and trade simulator account first. Invest those $100 into simulator account first. Get a market access, participate, which is the most important thing, and learn how to play that game. After that, you can do whatever you want with your trading, and you can make as much money as you want with your trading. Start small and do not put all your investment account in every trade. In the beginning, I had one particular one mentor explain it to me this way. If you start in a fire, what do? in the beginning, one time I went camping and I could not, everybody had fire and I could not have started a fire years ago. That's because I put all that firewood in one spot and I was trying to light it up. Even with liquid, it didn't go higher. Fire starter it didn't go at all. Why? Because I put so much into one pile, it was not gonna go on. So I asked the guy, "What's your secret? How did you end up putting the fire so easy?" He said, "Start small. Start with the pine needles, then the pine cones, then the little twigs, then the little sticks, and then after that the small little branches, and then after that put the logs, and then put bigger logs. When the fire is so hot, you can literally take a small log, unsplit log, and put it into the fire, and it will still go on fire because the fire is so hot it will consume anything." So start small. Trading is the same thing. Start small, learn the skills, and take it from there. Test out strategies. Let's say we send you that trading plan with 12 different strategies. Test them out. See which one works for you. See which one you're comfortable with. As long as you use predetermined risk. On that particular form, the PDF format, we're going to send it to you. You will have particular parameters you have to fill out. Let's just say you cannot risk more than $500 per trade. It's going to tell you, and it's going to tell you your loss cannot be more than, let's just say, $1 per trade, $1 per share, or $2 per share. Depends on how many shares, of course, you're going in with. So, predetermined risk. Predetermined risk. Do not risk losing all your money in one trade. Do not be that guy. Do not be me. All or none. Double or nothing. Any of this stuff. Diversify even in your trading. And if you're only trading in one stock, just have your risk parameters set to 1%, 2%, 5%. If you can handle 10%, that's fine. But do not put 100% of your account and walk out of the day with a blank account, with a zeroed out account. This is just not gonna work. On the right hand side, you're gonna see the little piece of little diagram or little picture. It shows you that number one, you have to set your risk reward. Number two, don't go all in. Number three, you have to find a catalyst, a trigger, why you even open that trade from the beginning. Number four, don't follow others, because when you follow others, most likely you're already at the end of the run, not the beginning of the run. Number five is control your emotions. If you're not risking so much, you're gonna tolerate the losses. If you put all of your money in, just like I've done, your emotions are gonna be out of control. You're just all over the place. Number six, cut your losses. If your stop says $1 per share, take that stop. Put it in the hard stop, not a mental stop. And after that, you can, when you move to subjective trading, you can change that. But as a mechanical trader, as a mechanical technical trader, you should do that. Take your losses. Number seven, find your strategy. After you try a few things, you're gonna realize which one works for you, which one doesn't work for you, and stick with that strategy that works for you. And of course, login will actually show you what worked for you. Practice paper trading or simulator trading. This way, you're not really risking your own money onto that particular you're into trading. Number nine, avoid FOMO, fear of missing out. I'm a guilty of it. A lot of people are guilty of it. You hear that something is gonna come out and this is it, and everybody's making money, and you don't want to miss out, and you jump in, and of course you end up losing money. Track your trades. You have to have a log. You have to have a checklist. You have to have a binder. You have to track which one made you money, which one lost. You have to review those trades at the end of the day. You don't have to do that your entire trading career, but in the beginning you have to do that so you actually know what works and what doesn't work. If you don't know what works and what doesn't work, you will never be consistent. It will be always new action, new result, new losses, or new wins. So consistency in action results in consistency in profits. Build a watch list. Let's just say you have 10 trades that 10 stocks you trade. Do those 10 stocks and 10 stocks only. Don't go into 100. Don't go into like different markets like crypto and options and commodities and bonds and all kind of stuff. Just trade one thing in the beginning, and after that you're gonna be able to do more than one thing at a time. But in the beginning, develop the muscle and brain memory to just focus on one thing and one thing only. If you're struggling with this, you should listen to the audiobook. It's called The One Thing. They will explain to you how, in the beginning of anything, focusing on more than one thing is going to be actually disastrous. And of course, protect your capital. Protect your capital. Look, without capital, you're nothing. You just, I don't know how to say it, but you're like broke. You're not going to be able to trade. Look, to trade, you have to have money. And if you have no money, you cannot trade. So don't put all your account in one trade, especially options or commodities, and expect that it's going to work out. You have to slice that pie so many times. So if you're wrong, you are not losing your shirt every single trade. Look, from a trader to a trader, Day Trading Fans is a club for all traders from worldwide. Most of the people actually from overseas, not the US. I'm US based, but most people are from other countries, have access to our markets. So if you have any questions, you can reach us at any social media platform. We're on Facebook, YouTube, Udemy, Instagram, Threads, whatever. All platforms are there, so you can send us message anywhere. If you really need an answer from one of our traders, email daytradingfans@gmail.com. Ask for a copy of that trading plan. Get it, look at it, try to practice it, to try to use it, and we'll answer your question. Join our day trading club on the website daytradingfans.com, and we'll help you answer some questions or answer some concerns for you. And you can even ask other people. Let's just say you're from India and you want somebody to answer a question about the Indian market that I might not be, familiar with. I can link you up, or you can find another Indian trader who's successful. You can ask him directly, and you can get an answer directly from somebody who speaks your language. Right, here's a link to a few of our ways to reach us. Of course, email is the best way to reach us.
Thank you for watching. Share this with friends and family, and please subscribe.